Hey, welcome, guys. It's been a minute since I've been on here, but it is Tuesday night, September 23rd, in preparation for Wednesday, September 24th. We're continuing on, first of all, before we jump into the charts here, some chart analysis, continuing on with Roy Longstreet's viewpoints of a commodity trader, um, thinking and learning. Some people know that learning is important. Most traders know that a little learning is dangerous. It sometimes happens that those with much learning find themselves at a disadvantage. The go-go markets that rise for no good reason catch the seasoned, well-informed trader off balance. With more and more new people coming into the commodity markets, we can expect markets to become more exotic. When this happens, it seems that though when this happens, it seems that thought without learning succeeds. If you know anything about past markets, you seem to be too old to participate. The market seems to pay attention to the wildest of rumors. This can and does go on for a time, sometimes for a long time. Always in the end, there arrives unheralded the Black Knight of Panic. His invincible flashing saber quickly cuts down without mercy those who linger too long and proves once again that thought without learning is very dangerous. There is, of course, the other side of the coin. Some would-be analysts have great learning, and this is all they have. They know so much about the past that they live in it. To be productive as a trader, one must be in tune with the past, present, and the future. This is a changing world. Cause and effect relationships do not remain constant. History never repeats exactly. Just as no two persons are ever exactly alike, no two markets move similarly in minute detail. Those who depend on learning alone, sooner or later, prove that learning without thinking is time wasted. All right, we're going to go with the next one here, realizing bull markets. Um, realizing markets can be either bear markets or bull markets. There have been more realizing declining markets than realizing advances. When one is faced with a realizing bull market, he has the unusual opportunity. The direction is highly probable, and the degree of the rise is often large. Sometimes the rise occurs in a relatively short period of time. The risk is usually small. The characteristics of such a trade are: one, a fundamentally bullish situation exists. Number two, reluctance by the speculators to buy. Number three, an inversion or small carrying charge between cash and futures. Number four, business interests may be either cautious or bullish. These conditions are rare. Some illustrations are the meal market of 1965 and 66, the corn market during the summer of 1923, the belly market during the May through July of 1965, and I have the March 2020 COVID-19 crash. The Fed stepped in and recovery followed. All right, I think that's all we're going to do tonight. The next one is going over some risk control, but we'll get to that one later. All right. So I wanted to, let me get my marker back in place here. Okay, not a whole lot here. I do have that tomorrow is a potential for a pinball buy, yet the signal is the second day of a sell signal. Keep in mind, we are in a 3-bar, so we'll look at that when we get to the daily. On the weekly chart here, you can see that we've been pushing up here pretty good on the weekly. Nothing really slowing us down or stopping us. Let's get this LBR up here a little better. And let's use this down. Okay. Yeah, you can see we're getting a little bit of tapering off. Finally, the slow line rolled over, but the fast line's increasing again here. We were pushing close to this upper band here in the Keltner channel on the weekly. So, we have not exceeded outside of it like we did here, but we are definitely pushing up again pretty strong, staying up above this level here. on the weekly here. So again, we got above it, checked it a couple times, and then we're moving up off to the races here, as you guys have noticed over the last couple days. All right, so that's the weekly. On the daily, I do show that it was the 14th day of a extended run to the upside. Let's reduce the volume down here. The 2-period rate of change. So I know you guys like this expanded version here, but a little bit of pain. Here we go. All right. So we have this extended run above the 5-period SMA. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Today was actually 14. We did not close under that yellow dotted line, which is the 5-period moving average. So the I am showing like I said, a pinball buy, which is if you guys don't remember me talking about that, look it up. We'll go over it. Ask me. I have PDFs on it if you want those. Let's see. Oh, we're also in a 3-bar. So the low here from Friday, the highs here from Monday. Today did not take out that high. Technically set up a 3-bar breakout mode. So we're going to keep an eye on that to see where we go tomorrow with that. So we can go up, break out to the upside. We can go down. We are pretty close to this upper band, but as this price moves up, we have a lot of room that can still go up before we take out the top of that Keltner channel. If the markets were to choose to go up on that. Weekly, okay, we said that. Okay, 60 minutes. So let's pull over my 60-minute chart here. Okay. So on the 60-minute, I pointed out this morning in the room there that we did have a Keltner channel reversal. That out of my upper Keltner channel of there for that move down. We did hit that at the 8 o'clock. We again hit it at the 11 o'clock, and then we just broke from there on that. So we did. So what I wanted to make note of is we had kind of this low developed area on the way up. Basically from here up to here is what I had marked off earlier in the day. That has now been, since we kind of ate back into this. Well, now we still have this area pretty low developed on the way up, pretty low developed on the way down. So, if we did get a ABC up, we could get some play back up into this zone. Otherwise, we could come down, do this little bear flag, and then have a second leg down. If the markets were to choose to do that. So we want to be open to both possibilities there. I'm going to go from here down to there. All right, so we have currently that move there, and then if this were the highs, that puts us down around 66.65 as a equal swings move if the market were to choose to do that. So keep that in mind. Again, we could get an ABC up first. Play back in this area. We could just get a red zone loading only, and move back up, because this whole extended run, we've just been kind of climbing up. Every red zone has been a buy so far. But I want to keep in mind that we are on the extended on the daily. Let's see, where'd that go? Yeah, on the daily, 14 days to the upside there. So keep that in mind. Okay, I wanted to pull over. Yeah, I think this is my 65,000. 65,000 tick chart. You can see right now after this this move down here, this pretty aggressive move down, impulse like down. We've come up kind of in a green whack-a-mole zone with a little bit of divergence showing here on the 65,000 tick chart. We'll see how that kind of plays out tomorrow. Like I said, will we get, move back up into some of these lower developed areas? So the 65,000 tick chart shows a slightly different picture. You had, sorry, let me take off my lock on that. Okay, you had a little bit of lower developed area here. I guess it's kind of come up into here. You had some of this lower developed. We're just marching up. This did do a little back and fill here. So, kind of looking at the potential lower developed areas there on the 65,000 tick chart as well. The internals, we've got those here. I mentioned this morning, kind of pulled this up on the screen to show you the trend. If we're below 0.6, higher probability of a sell-off. This morning, or as we were looking for that breakdown, we were down here at 5 something, 5.4, 5.2, hitting down below that 0.6, which is the yellow line. We started hitting down 0.5 and we get a recoil back up. So that's just something interesting there to watch, keep an eye on. Again, if you're above 2.0, higher probability of a rally. This is something that different professional traders have pointed out. I know it was also mentioned in John Carter's book. A lot of people I've listened to said that it doesn't have as much predictive power as it once did, but nevertheless, I still keep an eye on it, especially when we start reaching those zones, as we were this morning. All right, so let's go to the VIX here. All right, on the VIX, so this is our the SPY. Remember we had when we tested that lower part of this channeling up, I had this 1 day down. Didn't know if that would be coming back down and break down out of the downside, or we had quite a bit to the upside. Obviously, the market has chosen to make this move quite a bit to the upside. Still, if we're still bouncing back and forth in this long-term channel here, if we're still hitting the highs, lows, highs, lows, then we'd be looking for that move continue up in the SPY. Still further to go up here, so we don't want to discount that. The VIX, on the other hand, we've got sorry, let's get that down there. So the VIX, we've had the 3-point move up from here was on what was that, Wednesday? Yep. No, I'm sorry, Thursday the 18th. Thursday the 18th, we had the lows of 1433, 14, 15, 16, 1733 is up here. If we move 3 points up off that, then that bodes well for the 3 points up, greater probability of sell, whereas 3 points down, greater probability of buy. So we're approaching that zone there. We'll see how the market plays and acts tomorrow. If we were to get up near that 1733 or start pushing above it, to see how the market reacts tomorrow with that. So just a few things to keep an eye on. All right, guys, good to be back. Safe trading, happy trading. I hope everybody did okay today. Didn't get in too much trouble. These market conditions a little bit volatile, but take your setup, take your play, manage your risk, and let's continue to help each other out. I know I was still a little bit distracted today, getting back on board, but hopefully I'll be able to give better input tomorrow, or at least some observations, whether they're good or not. So, all right, guys, happy trading, safe trading, and we'll see you in the room.